Hey guys, it's the Algorithmic Trader here, and today I wanted to talk about daily bias, how I determine it, and how I use it in trading in the markets. Before we get into the video, make sure to like, subscribe, leave a comment down below telling me if you learned anything, and join the free Discord. Learn my price action concepts, and without further ado, let's get right into the video. So first, you'll notice if you watch price action very rigorously, you'll notice a few things. Firstly, time has a huge confluence to price. Time is super important for reading price. So if you want to determine where price is going to go in the day, you first need to look at the time. So what I like to do is go to Indicators, Market Sessions by Leviathan. Click that. Wait for it to open. There you go. I'm looking at the futures, obviously, NASDAQ right now. So what I want to do, let's say I'm looking for a bullish day, right? I actually was bullish today. So let's say I'm looking for a bullish day. What I want first is I want price to be pushed up to clear liquidity. So I want there to be a liquidity grab within the Asian range. This is the Tokyo Asian range. Liquidity grab below this consolidation, reclaims, rallies, and then it takes out this liquidity right here. And it takes out this lower high, lower high, lower high, rips through it, this high and this high, takes out that liquidity. And then what I want to see is to go down before the New York session. That's extremely important. Markets are manipulated. That's very obvious. So you want to look for a down. You want to look for it to go down to build up liquidity before New York open. So as you can see, we break, we go down. We rally into that fair value gap, we go down, we go down. We're building up liquidity, right? Consolidation, right? A bounce, a bounce, a bounce, right? We're consolidating, we're going down. We're consolidating, we're going down, right? That's what we're doing multiple times. Now, what you want to look for, since we are bullish on this day, we want to look for a touch of something, a key level to key us into a reversal. Look right here. Look at yesterday's low. We extend it out. And there we go. So we're looking for a few things. A buildup of liquidity, right? All of this buildup. We're looking for a continuation down. And then finally in New York, the London-New York overlap. That's the time where I want to see the liquidity grab for the reversal. Somewhere in the center of this time frame. So the liquidity grab happened right here. If we zoom into a lower time frame, look what happened. I was watching this. This is where I was anticipating to go long. Liquidity was being built up. We were looking like we were about to break out higher, and then we tanked. That made induce people to go short. We went slightly below the low of day. That looks really good short. We hold, we recover back above it, we hold, we rally, we come back down, we rally. We keep doing this, and we rally for the rest of the day. So the idea is that it's not just what it looks like on a higher time frame, because remember, the higher time frame is made up of these candles. If you remember that the market is manipulated, you'll think of the market differently. You'll think of, oh, look at all of this accumulation up here. Look at all of this. All of this. Market might want to go back up there. It's usually somewhat drawn to liquidity. So you might want to look for that as a good reversal trade. If you see this kind of consolidation in the middle of the day, you know it doesn't really want to continue lower. Obviously, if there's bad news pushing the market down, then you don't really want to look for reversal trades. But if it's a normal day like this, it's a really good day to look for that reversal trade. And that's the trade I took, right? Just like this day, if we would go back here. The markets went up. So what are we doing? We're looking for a short day. Now, it's obviously not as just outlined as this is. Okay? I'm going to be like, it's not. Okay? You will have days of losers. Some days the market will be trending, and you have to determine that. If the market continues to hold higher levels and does not break structure going down, then you know the day is trending. But if you have a huge liquidity buildup like this, huge liquidity buildup, right? And then finally buyers break out, you have a ton of sell orders right here, resting here as stops. You have a ton of kind of breakout traders going out here, along here. And remember this, what is our setup for shorts, right? We want to see some sort of a down close, so we push price higher. Now, it's not always going to look the same way. The point is not to make it look the same way. The point is to find accumulation. This is accumulation. This is accumulation. To have like that higher trending day. And then the key is to see also accumulation throughout the day before the reversal. So that's what we saw this day too. What did we see? Accumulation at these highs, right? Like right here. We had this right here. Accumulation at this high, accumulation going up, and we had the breakdown, and then we had the rally and reversal. Same thing here. We have accumulation, 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 and then finally a point of interest at this very heavy selling area. This is supply for me. This is extremely heavy selling. Our point of interest was there. We had the reversal. We had breaks of structure. We had rallies into fair value gaps. And look, it takes out all of this accumulation. And that's how I base my reversal trades on. Look for accumulation in the uptrend. These are on futures, so you want to look for this on futures. You want to look for the market being manipulated to go up. And then you'll want to see it just rally if you want to go short. Or if you look for choppy days like this, it's very certain you'll have a good reversal. And that's what we saw. And that was the trade I took. As you can see, I'm still in it, actually. Right here. So, yeah. And I think that will be it for today. Make sure to like, subscribe before you go. And I'll see you in the next one.